The Big Short 3.0. Rate hell is coming! The lumber surplus growing, which means big changes to the housing market. New shocking numbers revealed today. Yep, these are the headlines you're probably going to see the most. You're not going to see people saying that the market is actually doing well or that we're trying to come into a healthy and or balanced state. You're going to see the crash, the scary, the horrible. Well, today, I'm Jason Jarvie with Realty ONE Group here in Surprise, Arizona. I want to bring you some of the data. So come along with me while we look at both our leading and our lagging indicators to see where we've been, where we might be going, and how we're going to get there. The way I like to start out, again, looking at these leading indicators is let's look at our listings. And today we're going to flip it a little bit, and instead of just looking at active first, we're going to look at true new listings, which is what we're going to see here on the screen. What we see here is 2020, 21, and 22. And you can see that even with the insane nature of our market at that time, the listings were pretty consistent. Buyers and sellers both were very hopeful as to what was happening in the market. So let's throw in 2023 here for a second, and you'll see something a little bit different. What you see is this divergence from the line, and what this indicates is that sellers are not as optimistic as they once were. And that's for good reason. In the last 6 months, we've seen quite the dip in our pricing, which means, yeah, as a seller, I'm going to be like, well, I'm not going to get as much money. Why would I sell now? Rates are like, they're way up over here.
So high.
So it's going to be more expensive to buy. And this makes sense. So you might automatically assume that with sellers kind of fearful as to what's happening in the market, buyers would be doing the same thing. Now, in all honesty, yeah, buyers are a bit fearful right now. Interest rates, they're kind of like a rabid dog. They are all over the place right now. But when you look at our active inventory, you can see that here on the pink line, we have been dropping pretty consistently throughout the year. And what that means is that buyers are still out there. There's still demand in our market. And later on in the video, we'll look at the actual gauges, or our speedometer, as I like to call it here from the Cromford Report, to see what that looks like when we compare buyers and sellers' demand and supply. So looking at our leading indicators, let's look back at sellers again. Let's look at what they're doing once they get their house on the market. And one of the ways that we can look at that is we look at the price changes. So we're looking at number of price changes per week. And what you see is that sellers, they're seeing a change in the market too. And the number of price changes are declining week over week. Basically, since we had the peak back here in October, we had the highest number of price declines, which inadvertently is going to have gotten you a lot of headlines. Price declines everywhere, slashing, cutting, chopping. You know, that's what they were saying. Now, in all honesty, that was true. We saw like a ton of price declines. But that's because we were at the peak. People were optimistic that maybe I could touch this number way up here in dream price territory. I always like to ask sellers, if you could paint the perfect picture in a dream world, what would you do? Now, usually they tell me, I want $1 billion. Well, yeah, I get that. Now let's talk about reality and what the market is showing us. That's what happens with me. Sometimes agents are like, sure, let's try it. That's when you get all of these ridiculous price cuts because they were reaching for a moon price that wasn't possible. If the price changes are going down, the days on market are going down, that must mean that we have a ton of buyers in the market. Again, we're talking about supply and demand here, but that's just not the case. Are there buyers? Yes. Are there as many as there once were? No. And the way that we can see that is we're looking at listings under contract. And you see here the brown line, that's this year. That's 2023. We can throw in, let's try 2020 and 2019 on this one. That way we can get a little more perspective historically speaking. 2020 was kind of a weird year. Let's pull that one back out. Let's throw 2019. You can see that we are super duper low on the demand side of things. But because we're also coming down in listing or supply, those two are going to show a very interesting number here at the end. And what we see is that beginning of the year was looking pretty promising, but because of interest rates, buyers are kind of in a bit of a worrisome position. Rates are 7%, rates are 6%, rates are 6.5. let's get the beer goggles off of the Fed and get some consistency in here, and we're going to see demand come back probably pretty strong. There is pent-up demand out there for homes. People are looking. And you can see that indicated right here in week 14 because we saw a dip in week 13 in interest rates, conventional rates hitting somewhere in the low 6 range. Mind-blowing, right? Or not. I mean, that kind of sucks too. And those buyers came to market. This is a leading indicator of what's happening right now, remember, because this hasn't closed, so we don't know how it's going to happen, but we know what people are trying to do. So if we know what people are trying to do, let me tell you what I'm trying to do. I'm looking for some likes and subscribes here. I would hope in the end of the month of April, I might be able to hit 50 subscribers. That's 50 potential people that I can get information to that could help them in the buying or selling process. So do me a favor, go down below, hit that like button, hit the subscribe button, and if you want to see the updates that I'm trying to put out here on a regular-ish basis, hit that bell notification. So now that we've done that, let's take a look at what these numbers mean together with the contract ratio. And what the contract ratio is this is when you take supply and demand, put them together, and this gives us an indicator for how the market is moving. And what I've done here is I've taken and I've just put in January, February, March, and April. This is a very seasonal indicator here, and you can see that clearly on the map or the graph here that beginning of the year, January, is usually a pretty low time. There's not a lot of buyers, and our market starts to warm up through the spring, just like our weather. Now, I don't know that we really get a spring here in Phoenix. It hit 99.8 degrees here at my house yesterday, here at the beginning of April. That's pretty early. We're not supposed to see the hundreds until May, so it's starting to look like we might have a hot summer on our hands. And we might see that just the same here in our real estate market. When you're looking at this, you can see that in April, we hit 70.4 in our contract ratio. And as my little graph here changed, you can see the maximum and insanity of last year in 2022 as we were coming off of that high and coming down into reality. Let me go ahead and switch this back to where we were. So back again, while we're looking at January, February, and April, don't forget March, that one's an important one. You can see that we have a nice steady swing. Let me take off 22 and 21, and we'll see more clearly what that looks like. In 2020, we were going up after, before the pandemic hit, and each year prior, we were about the same. When you look at the actual numbers, we're starting to come in line with 2018 and 2017. These were good markets. The market was doing well. It was appreciating at a healthy rate, and it looks like we might be getting back to what that looked like back then. So with the potential of the market looking up, let's look at the market cycle and where we were and where we are again. When you look back at February and March of last year, we were at this euphoric, unbelievable stage of the market is just going to the moon, right? Everybody to the moon, 30% appreciation, crazy, to the moon. And then it fell off of a cliff. Unease, denial, pessimism, panic, capitulation, despair. And at that point, it was over. All of the headlines, they were talking crash. And then the Phoenix real estate market over here was like, I've got something different for you. We saw skepticism in January, right? I don't think so. And then despair again in February because rates, they hit 7s. It was crazy. Now we're back into the skepticism stage. Things are looking up. It's going to be positive. We'll see where that goes. So with the potential of hope in our market, let's look at our lagging indicators and we'll see what's actually happened and what's closed. What we're looking at is the monthly median sales price. This indicates to us, are things going up or are things going down? And as you can see, things are still going up. We're starting out here in the month of April with a median sales price of $427, leaving March at $420. That means that homes are selling for just that much more. And that's a positive indicator for sellers. Heck, it's a positive indicator as a buyer. Nobody wants to buy, which is what we just saw in the last 6 or so months, as a buyer in a market that is falling off of a cliff. That doesn't feel good. Nobody wants to do that. They don't want to know that they're losing money coming into a situation, even if it's just on paper. Obviously, you don't lose anything if you don't sell, And that's an important aspect to the buying process, because you shouldn't be buying, unless again this is just an investment, then you really need to look at the numbers. But as a home, you should be buying it for the long term and planning as that long term, because our future is not guaranteed and we may have many more of these correction cycles as everything in our world turns upside down and topsy-turvy. So all that being said, let's look at our speedometer, our monthly market or our Cromford Market Index, and see what it is that the Phoenix region is doing right now. So here it is. Here's the gas pedal, and you can see this purple line right here. That is our market accelerating. We started off the year here at the beginning at 102.7. That's darn near perfect balance. And we've moved all the way up here to 137.7. Index-wise, we're starting to move pretty solidly into a seller's market. Let's throw a couple more years on here for perspective. We know 2022 was crazy. We hit this huge peak and we fell off of the roller coaster at a brisk pace.
Roller coaster ride, roller coaster.
All the way down into that buyer's market. 21 was way up in stratosphere territory. 2020, that was a weird one. 2019 looks a lot like this year, and in 2019, things weren't so bad. 2018, oh, look at that. Pretty close to what's happening this year. For all the naysayers out there, let's look at 2007 and 2008. Whoa, well, those are pretty low. Not exactly where we are. That's definitely buyer's market territory. Not a good place to be until 2009, when it started to warm back up into a balanced space. So, with that said, our speedometer is showing 138.2, our demand index at 82.1, and our supply at 59.4. Because those two numbers are inverted, you can see our market index shows in the green. That means our market is moving in a positive seller's fashion. That's not exactly the same for all markets. So let's take a brief look at our 17 city index just to see where everybody's at and understand where we're going. So here are our 17 largest Phoenix metros, and what you see at the top is Chandler is on fire. It's blowing up with a lot of movement right now. And all the way down at the bottom in the buyer's territory, Buckeye and Maricopa, these two areas have a lot of builder homes or build out in this area. So that supply doesn't match up with demand. But you can see that Queen Creek there is moving up. Goodyear is well into that seller's market. Remember, 110 and plus is sellers, 90 to 110, that's a balance area, and 90 and below, that is a buyer's market. So if there is a city here in this ranking that you want to know more about, maybe you want to see what their supply and their demand are, what's happening in these specific regions, drop me a comment, shoot me a message, let me know. Again, hit that like, subscribe button. It really helps the algorithm. I can try to get this information out to more people that it might help. And if you're in the Phoenix metro area and you're looking for help buying or selling a home, feel free to reach out. You can reach me with my contact information down in the comments, up in the description, or hit up our website. Thanks for watching, and I look forward to seeing you on the next video. Have a good one.